Your offer is accepted. Now what? Okay, so you kept your cool, followed your realtor's guidance, and your brilliant offer has been accepted. Very exciting. But the journey's not over. Now come all the steps so that the home actually becomes yours. The first thing your agent will do, depending on the state you live in, is to open up the title in escrow. Because so much of this step is behind the scenes, it might seem pretty mysterious. It's actually very straightforward. Escrow is a safety net that protects both the buyer, the seller, and also the agents during the transaction. They're like Switzerland. They don't represent the buyer or the seller or the agents. They're a neutral third party that makes sure that everything everyone agreed to in the contract actually happens when and how it's supposed to. The escrow officer starts by checking the home's title for any issues. They make sure that the seller actually owns the home and can legally sell it to you. They hold your initial deposit, also known as earnest money, in the trust account. They make sure that there aren't any liens on the property and make sure everyone is doing what they're supposed to do, like inspections, disclosures, etc. As you get closer to owning your new home, the escrow officer coordinates with your lender to prepare closing documents, making sure all the financial figures are accurate and all the terms of the sale are reflected and correct for both the buyer and the seller. In essence, escrow is there to ensure that everyone holds up their end of the deal. All agreements are honored, and the transition of the property ownership is smooth and secure. It's a critical step in the home buying process, ensuring that when you get the keys to your home, it rightfully and legally belongs to you. While they're doing that, and you're having your inspections done, it's like sending a home to the Mayo Clinic for a head to toe physical. What you want a professional inspector to check out everything: roof, windows, foundation, electrical, plumbing, dry rot, termites, the well and septic if the property has one, and other inspections. Your agent can tell you what inspections should be done and what's not necessary. A good agent will always recommend that a home and termite inspection be done by licensed inspectors. If they find something that might be a concern, they may advise you to have a specialist look further into it. As a local expert, your realtor should be aware of any other issues based on their past experience with other homes in that area. While you're busy with inspections, the seller will be filling out the disclosures they're required to fill out. Think of it like seller telling you, here's what you need to know about this house before you decide to buy it. It's all about honesty, transparency, and every state is different in what they require. But disclosures can include things like a death on the property, previous repairs and renovations. There are also types of disclosures that the seller most likely wouldn't know about. For example, natural hazards disclosures, lead based paint, homeowners association disclosures, registered sex offender in the area, governmental disclosures, retrofit standards, fire hazards, radon gas for buyers. These disclosures are super important because they give you a heads up about what to expect with the house. It might also be small things like a leaky faucet or bigger issues like an old roof that needs replacing. Having these things disclosed helps you make an informed decision about buying the home and might even give you some negotiating power. And for sellers, being open and honest in these disclosures helps ensure that the sale goes smoothly with fewer problems or disputes later on. Also, during this time, a professional appraiser who is a neutral third party evaluates the value of the home you're about to purchase. This is not just about the numbers. It's about confirming for the bank that the home is worth the loan that they're giving you. This is very important. The value of the home must be equal to or less than the loan plus your down payment. If it isn't, the bank won't finance it. If that happens, you may have options like offering more as a deposit, This is something your MLO and agent can advise you on. By the way, during this period, your MLO may ask for even more information than what you've already given them. They may ask for employment verifications or letters explaining where the cash for your deposit came from. They may ask for more tax returns. They may even ask for things you've already given them 3 times. Don't freak out or get irritated. They need these things to make sure that your lender gives the final approval and gets the funds into escrow with no delays. You're on the right track? Almost there.